Hi everyone, and welcome back. For those of you who are new to this channel, my name is Michael Marion, and I am a certified public accountant at Marion & Associates LLC. We have decided to start to put together a series of videos containing hot topic issues after seeing all the mistakes that have been made by individuals preparing their own tax returns. We hope these videos will provide those individuals with the knowledge needed to prepare their own tax return, or to know when to seek out the advice of a tax professional. Please make sure to subscribe so you do not miss any of the new videos when they get released. Please comment below if there's a certain topic that you would like to learn more about. If we notice enough people requesting that topic, we will make sure to develop a video on that specific issue. The topic that we are going to be talking about today is very important because we always run into multiple people trying to claim the same dependent. So let's get started.
In today's episode, we are going to be talking about who can claim the child. We first have to start by explaining who is considered a qualifying child. There are 5 tests that must be passed in order to be considered a qualifying child, and we are going to go over each one of those tests in detail. First is the relationship test. This slide shows who can be considered a qualifying child. Important note, an adopted child is always considered your child, and cousins do not pass the relationship test. Next is the age test. At the end of the year, your child must be younger than you and younger than age 19 or younger than age 24 and a full-time student. A child who is considered permanently and totally disabled can be of any age. The residency test. The child must have lived with you in the United States for more than half the year. A temporary absence, such as attending college, counts as living at home. Important note, Puerto Rico or U.S. possessions such as Guam do not pass the residency test. Next is the support test. The child must not have provided more than half of his or her own support for the year. The last test is the joint return test. The child cannot file a joint return unless they do not have a filing requirement and are only filing to claim a refund. After going through these tests, there may be more than one person who feels they can claim the child on their tax return. This slide goes over the order of the tiebreakers. First, if the parents are filing jointly, they get to claim the child. Second, if only one of the individuals is the child's parent, they get to claim the child. Third, the parent who the child lived with longer during the year if filing separate returns. Fourth, the parent with the highest adjusted gross income if the child lived the same amount of nights during the year. Most years have 365 days, so this rule only comes into play on leap years. Lastly, the person with the highest adjusted gross income. This slide goes over the possible benefits, deductions, and credits associated with claiming a qualifying child. In order to claim the child tax credit and earned income tax credit, the child must have a Social Security number that is valid for employment. If you have a young child that is in daycare or summer camps, it may be beneficial for you to ask your employer to see if they offer dependent care benefits. Make sure to consult your tax professional to ensure all possible deductions and credits are being claimed and accurately reported on your tax return. As we stated in a prior slide, the parent who the child lived with longer during the year, the custodial parent, if filing separate returns, gets to claim the child. However, the custodial parent can sign Form 8332, giving the non-custodial parent the right to claim the child. The custodial parent must give the signed form to the non-custodial parent, not the IRS. Having the form signed gives the non-custodial parent the right for the exemption for the child tax credit or the other dependent credit, and the credits associated with education. The custodial parent still has the ability to claim head of household filing status, claim all the dependent care expenses, obtain dependent care benefits from their employer, and have the child qualify if they claim the earned income tax credit. If you're starting to feel that you need a professional to prepare your tax return, be sure to check out Marion & Associates LLC. We are a family-run practice located in Exton, Pennsylvania that specializes in personal and business income tax return preparation as well as tax strategies to minimize your future tax obligations. Our firm wants to form a long-lasting relationship with you and your family, not just be another tax preparer. We hope you found this video helpful, and thanks for tuning in.